Welcome, and thank you all for joining us today. I'm Katrina Stewart from AP Plus, executive sponsor for our Move to MPP program. I'd like to start by acknowledging the traditional owners of the lands on which we're meeting today. We're coming to you from Sydney, the lands of the Gadigal people of the Eora Nation, and like to pay our respects to elders past, present and emerging from wherever you may be joining us from today. We're looking forward to a great discussion today around Payday Super. This is legislation that will have implications for every business in Australia, particularly for the 60% or so of employees who pay their superannuation quarterly today. And we'll also be exploring what role the MPP can play in supporting faster, more efficient superannuation payments. I'm joined today by my colleague, Marnie Ryan, Head of Innovation and Enablement at AP Plus, who's been closely involved in the MPP journey for a number of years and may be familiar to a number of you. And we're delighted to welcome two special guests today. Rob Dunn, who is the General Manager for Payments, Pensions, Benefits and Perks at Employment Hero, and Shane Moore, who is the Project Director for Payday Super Implementation at the ATO. Welcome, Shane and Rob, and thank you for joining us today.
Thanks for having us.
Just a little bit about Australian Payments Plus for those who may be joining us for the first time. So we operate Australia's domestic payments infrastructure, which includes the EFTPOS debit network, BPay for bill payments, and the MPP, our real-time payment system, along also with Connect ID, which is a safe and secure way for Australians to verify their identity. The MPP is Australia's real-time payments infrastructure, which was intentionally designed to basically enable fast payments to be always available 24/7, 365 days of the year, to be data rich in terms of the capability it supports, and also to support simpler addressing as well with the use of PayID. Has been up and running for a number of years now. And certainly superannuation is it's a topic we've been talking about for a number of years, Marnie, in terms of what role the MPP can play. And we're going to sort of unpick that a little bit in terms of as it relates to Payday Super today. So I'm going to hand over to you to talk a little bit more about that.
Yes, and we have been talking about superannuation and the NPP since I think before the NPP even launched in 2018. So it's been a long journey for us to get here, I would say. And I will say, with Payday Super coming, it does require some faster and more frequent super payments. Employers need to pay super with wages. Super must reach the employee's fund within 7 business days of payday, and super funds have to be allocated within 3 business days or return the contributions, which is down from 20. And there are new penalties for paying late. How does NPP and real-time payments support the speed and efficiency that's needed? Well, we've got standardised payments, and specifically looking at superannuation payments, we have got a format that allows for specific call-outs on superannuation. We've got an ability to carry relevant superannuation data with the payment, and we also do account and payee validation, especially with our new confirmation of payee service. We can provide fast fail, so status notifications, and there is an ability to use our product Pay2, which allows for, third-party payment initiation, which has been a focus for some of the DSPs. Talking specifically, though, about superannuation payments and the types of payments that are covered within the SuperStream standard, which is required for the 1st of July, which is slightly different from Payday. So Shane and the team at the ATO have done a great job in separating out the data and payment standards piece for NPP, separating it from the Payday Super legislation. But what it still means is that there are contributions that need to be, accounts that need to be available for NPP payments at the funds by the 1st of July. And if you think about it, they are the contributions. I'm going to go into a little bit more detail, and this is actually about what we're looking for when you make a payment on NPP. And it's very similar to where we see BECS at the moment. Payment reference number is the key. And if we think about what's actually covered by SuperStream and by the payments data standards for SuperStream, it is actually just the simplest thing. It's just the very basic, the PRN, payment reference number, the date, and the value. And if you look at the difference between BECS and the NPP, it is exactly the same information that we're looking for when you're actually sending it. In this example, we're showing from an employer to a clearinghouse and then from a clearinghouse to a fund. Those three data elements are the key for all NPP payments as they are for BECS payments. Where to start? When we start thinking about employers, we want to make sure that you're starting now, aligning super and pay cycles. For clearinghouses, we want to make sure that you're reviewing payment processing infrastructure and engaging employers, funds and DSPs. For super funds, check if you're already receiving NPP payments. We hear that so many of you are actually receiving them already. If you're not, talk to your financial institution. If yes, there is a great source on the ATO website that tells everyone that you're actually enabled and able to receive NPP payments. Assess what your data is that's coming through. And for DSPs, ensure that your systems can manage the more frequent super contributions, but also look at the enhancing of the error and data handling. Basic comment though is start now.
Thanks, Marnie. And certainly, we have just over 7 months until payday super legislation comes into effect. So we wanted to have a bit of discussion with the panel today around what do people need to do to start thinking about preparing for that change, and also the role that the NPP can play in supporting the delivery of payday super. So Shane, I might start with you. This obviously is a big shift for everyone in terms of payday super and what that means for superannuation payments. From the ATO's perspective, what are the key phases of this change?
Yeah, thanks, Katrina. I thought you were going to steal one of my nuggets there for a second. So the first thing I mention is that 1 July 26 is the start date for payday super, and that's 219 days away. So in getting ready for payday super, the ATO has been consulting through our technical working groups to identify the key improvements to SuperStream that both minimised build complexity and delivered meaningful enhancements and efficiencies to the contributions process for both employers and super funds. Now, this is known as Contributions V3, and these changes will be delivered across 4 phases to spread the delivery impact and bring forward enhancements that will be a good foundation for the start of payday super. It will help employers get it right and meet the new 7-day timeframe. Now, these 4 phases are to allow new payments platforms, so faster payments must be accepted by funds from 1 July 26. There is an ability for funds to opt in and do that sooner, as Marnie has already mentioned. The second phase is to bring in better error messaging. It was a big irritant we heard about, that errors weren't common, they weren't well understood and weren't always timely for employers. So we're enhancing error messaging, and that will come in May 2026 and maybe sooner if funds are ready to send sooner. So the ATO can support that. The third change is a new series of fund validation services that includes additional data that will help employers have early warning and traceability of major changes to fund details like mergers and successor fund transfers. And the fourth phase is the major change to contributions message itself, which brings in the new member verification request, and that starts from 1 July 26. So the introduction of payday super brings significant focus onto the speed of contributions. There'll be little wiggle room for delays, as there's only 7 business days to get the contribution to the super fund. Everything needs to move faster to give employers as much time as possible and have as much time as possible to fix the mistakes before it's too late. Faster payments through NPP is one of those key enablers that can help employers meet these new timeframes. Even when there are errors or rejected payments on super funds, there can still be time. Currently, contributions data arrives before and at times days after the payment's been made. Payment had arrived at the super fund. Bringing NPP into SuperStream brings both payment and data closer together, even when there's a third-party payment provider or clearinghouse in the process. So it's an important time to talk about it.
Great, thank you. And so maybe let's just talk a little bit more about the role of the NPP and how it can support, not just in terms of delivery of payday super money, but also longer term, what are some of kind of the opportunities for how we think about superannuation payments on the NPP?
And as I mentioned before, we've been thinking about this for a long time. What we see and what we notice is, where with the BECS system at the moment, there's identification of particular types of payments, but it's really limited. And that has been payroll payments, essentially. what we have tried to do on the NPP is expand that to say there's a classification for a superannuation payment, and that gives us an opportunity in the future to actually develop more content, better validation, additional information in the payment message. That doesn't mean that that's where we're at now, though. I think it definitely is something that we'll look to in the future, because to Shane's point about the error messages and the speed in which those errors have to be validated, we think that there's an opportunity for actually reconciling and correlating the information that comes back in a payment message around an error as opposed to a data and SuperStream error that's coming back. So where you're actually able to match that data, that's a key, I think, that we'll find is going to be needed as we move forward.
Mm-hmm. So really sort of having that fit-for-purpose payment message to specifically support superannuation and what that means over time. So 7 months is not far away, particularly as 2026 looms on us very quickly. What practical steps should employers take today to start preparing? And I might start with you, Shane, and then come to you, Rob, for your perspective.
Sure. Well, I guess it's important to understand and investigate what these proposed payday super changes mean and how they affect you as an employer or for your employer clients, and also includes SMSFs. So employers need to ensure they can make SG contributions at the same time they pay salary and wages. And there's nothing stopping them from transitioning sooner to a more frequent payment cycle from now to help them get ready to iron out their issues. 13% of employers already pay super on payday today, and many more employers already pay super more frequently than quarterly. Another message is that the Small Business Clearinghouse is closing and it's time to start looking at alternative options now. We don't want people to wait until 1 July 26 to make this change, and they can consider their current payroll package and the functionality it currently offers and look at other commercial options such as other payroll providers, clearinghouses and fund offerings. There's also a new concept called qualifying earnings that's used as the base to calculate the amount an employer has to pay on SG contributions and also the super guarantee charge if they are late. You'll need to learn more about QE, and more information is available on our website. Don't forget that this is also reported. This will be reported through Single Touch Payroll from 1 July 26. So employers will need to start reviewing their pay codes as they get closer to 1 July 26 to see which amounts need to be reported as QE. Now, software providers are currently looking at what this means for your software products, and they will be in touch with their clients once they know what that changes look like. And the ATO is working closely with those software providers as we frame up those changes to those technical documents. We do acknowledge that there's a demand for information and the detail on what they need to know, and we need to get information out quickly. So we've been releasing a series of fact sheets and web content to help everyone prepare and understand these payday changes. They are available on our website at ato.gov/payday super. Now, this includes a recently released fact sheet on the changes being made to SuperStream that help reduce errors, also help funds accept contributions. If employers are receiving errors now, they should be considering how to fix these errors as we move to payday super. Funds will have less time. So that shift from 20 days to 3 will mean that funds will be returning more errors if the data's not right. So if funds are already sending back warning messages and errors to employers today, they should be reviewing those. The risk is they may become a rejection come payday super, because funds won't have the time to work with employers to resolve missing or incomplete data. We've also recently updated website content, including information on QE and the updated rules. There's a fact sheet on the key changes for payday super for employers, which is a good comparison between the existing rules and the new rules to come into effect from 1 July 26. There's also videos from our Deputy Commissioner, Emma Rosenweig, explaining what employers need to know about payday super, and one for DSPs is also available on our software developers website. And our last Small Business News article was solely focused on the payday super changes with some helpful tips for employers. I recommend you sign up for our ATO newsletters to get on top of these changes. We're regularly providing updates for our DSPs through their DSP newsletters as well. So our message is we'll be communicating often and as regularly as we can with meaningful information and engaging through DSPs and employee networks as required.
Great.
And we'll share that information out to our banks as well.
Mm-hmm. So certainly a lot of material that's available for people to utilise. Rob, what's your perspective in terms of what employees need to start thinking about doing?
Yeah, so obviously we've heard it and we're going to hear it throughout. Start early is the key. 7 months, or what was it, 290 days?
19 days.
19. It sounds scary when you put it in days. is critical. And so, a bit of context as well. Employment Hero, we currently service around 350,000 small businesses, 2.5 million employees. So we've been really working to engage with them to just understand the fact that that move from quarterly pay cycles for superannuation through to weekly, fortnightly, and monthly is going to be significant. And so we've broken it down 3 key ways when we're working with employers is firstly, make sure your data and systems are ready. So it all starts at onboarding. Most errors for superannuation guarantee contribution payments are incorrect data captured when you onboard your employee to your platform. So make sure that you're using systems that can help you validate the data, capture it fast and early, and minimize the risk of any downstream errors or delays. The second point is planning your cash flow. So our modelling is showing that the average small business cafe could potentially need to free up to $124,000 worth of cash flow on a different cycle to move from quarterly through to, say, fortnightly payments. When we've spoken to our employers, around 1 in 3 said they're going to have to open up new cash flow structures to make sure that they're ready for that. So plan ahead, look for tools to help you with that. And then thirdly, the actual payroll system and clearance of money, make sure you're working with systems that are bringing in automation, real-time payments, so that you can see errors in advance, buy yourself more time by having fast payment movement, and understanding that you are working with providers that give you very clear messaging back for all the improved SuperStream messaging that's been invested in by the ATO, so that you can minimize that process, automate the workflows, and minimize the risk of any penalties. So if you're really leaning into those 3 items, onboarding, making sure you're clear on your cash flow and transition, and automated platforms, you'll be well set for 1 July.
Great. And certainly it really emphasises the importance of the accuracy of that kind of payment up front to really help that kind of process, and thinking about what are some of those broader process efficiencies as well that employees need to think about. Yeah. So let's talk a little bit more about the role of super funds and clearing houses in realising payday super, and what should they be thinking about to get ready to help support employers as well. So Shane, might start with your perspectives.
Yeah, it's important that they probably look at their processes today, understand how their systems work today, how their matching processes are working today, and look to where they can bring some efficiencies into those processes. It's important to, I guess, focus on that most employers use a clearinghouse to make a payment to a super fund. Although I think our modelling shows around 75% of contributions today go through a clearinghouse or a payment provider in some way. So with a focus on 7 business days, it's important that that's trimmed as much as possible to support employers getting money to funds, because money and data has to arrive at a super fund in an allocatable form before the fund has 3 days to then allocate or return. So to Rob's point, it's important to help employers get the data right. So look at what's happening today is key. And one of our, Marnie's already said it a few times in our short 18 minutes, is to not wait.
Yeah.
It's important that these things are done soon, and employers are given as much time as possible to get ready. Because, obviously the Payday Super Bill did proceed through Parliament quickly, and the clock is ticking. So it's important that those things, do start planning, do start communicating, and consider those changes. It's important that as much as possible is in place to support employers from the start. Our modelling of anticipated volumes sees the contribution total number increasing by nearly 3-fold. So today there's around 200 million contributions paid by employers to funds. We estimate that will be more than 500 million come Payday Super. So if there's any issues that are existing in the system today, or lags or delays or data quality problems, they get increased and become more material come Payday Super when there's less time for everyone in the system. So it's important that everyone looks, and all providers right through, from employers right through to funds, look at how you can strip back your processes to be as efficient as possible, and helping employers comply is a key focus for everyone in the chain, I feel.
Definitely. Rob, your perspectives in terms of what super funds and clearinghouses and others need to start to think about?
Yeah, I guess Shane touched on a lot of it really well, where just making sure that your messaging structure is where possible, compliant and up to speed with the improved messaging structure as early as possible, because there's going to be some teething challenges and there's different variations of how that's currently done. Making sure that you're using SuperStream all the time so that the employer gets that single standard type of message through the same channel will mean that they can be more efficient on their side as well. So it's everyone leaning in and understanding all the improvements that are being made and trying to adopt those as quickly as possible, as outlined in that screen that Shane presented for MPP and the SuperStream messaging. The earlier adoption will help everyone, because that's really what we're trying to lean into from the employer side as well. So that then that works with everything that funds and clearinghouses are doing.
Yep. So really, really important to start that journey now and start to learn from that experience as well.
If I can build on Rob's point there, I guess when we say getting ready sooner, particularly things like NPP, it's easier, it's probably prudent to also look at implementing early while we're in a quarterly system and the volumes are lower, and you also, funds have more time to resolve those issues, because if there are, the PRN isn't passing through as expected, funds aren't seeing on their bank statement as they expected, you've got 20 days to resolve that issue in the current system, on the quarterly regime. Under Payday Super, you've got 3 days to resolve those issues. So it's important to take advantage of the time we've got now between now and the start of Payday.
Maybe I can touch on that. What that means for a fund is they need to talk to their bank. If they are seeing a transaction listing coming through and it's got gaps in where the PRN is, that reference, then talk to your bank, understand what is actually happening. Some organisations have really old file formats, and your bank is more than willing to help you to work out how to actually receive those file formats. And look for the right spot. I think what we've seen is that the requirement now is to have the PRN unencumbered as it comes through in the payment flow, and it's really important that we're identifying where it's not. And we're actually on top of it, either from a fund perspective, but also from a banking perspective. We want to make sure that this is as seamless as possible. And we also want to make sure that the banks are, taking responsibility to make sure that their customers and the funds that they are banking essentially have everything set up.
And so we probably have a number of financial institutions joining us today, Marnie. So what kind of would be your words to the banking sector and preparing?
Well, actually, we have, made it very clear to our organisations that are connected to NPP that we expect them to take almost a leading role in this, and making sure that they've got that they're checking in with the funds that they bank, but also that they're actually confirming that those funds are able to receive NPP payments, that the accounts are enabled. There was some really interesting stats that came out via Ausetti actually, that there's only really 84 bank accounts for APRA funds. So it's really quite interesting when you think about it. We can pretty much check that off on a list, and we can make sure that those banks are talking to the funds, really leaning into the fact that they have the right information that's coming through. And let's do this now. I'll say it again every time. Start now, start now. Yeah. We want to see it before Christmas, and we want to see the names on the list. We want to be able to say that there is, a really solid footing before the 1st of July, because if that happens all on the 1st of July, we won't actually achieve it.
But I know you keep saying the start now, but it's so much of it is in that nuanced detail when you do get into it of, okay, maybe as a fund, your bank does currently support MPP or Pay2, but does it do that on all account types? What's the OR structure? Is there anything in there that may cause challenges with your reconciliation system? So if you start earlier, it means that you'll be able to run it on that quarterly basis. You'll be prepared for the extreme acceleration in volume come 1 July. So yes, get into the nuance now.
And I think from a fund perspective, it's probably important to find where that PRN is on your bank statement, and if you need to make some changes in your matching processes to continue the straight-through processing, because we do acknowledge, obviously, when NPP first entered the network, there was concerns around the impact on straight-through processing. So I think, obviously, with the maturity of the system now, and better systems in place, and better guidance and things in the ATO schedules around NPP now make it clearer on what it needs to be. So there should be more reliability that it's appearing where it should, so that funds can be talking to their providers to understand, well, where is it on my bank statement, or do I need to move to a more modern bank statement and consider those changes while there's time to bed them in, and support that straight through processing side. And the other part also, it's about receipt and reconciliation of the payment to the data message. It's not necessarily about instant allocation now. I think that's a future goal where we'll get to as an industry at some point. Obviously, we'll move further down that runway, but at the moment where we are on the range, it's about receiving faster payments and faster reconciliation so that it supports, the Payday Super start.
Because certainly it will be a journey, but kind of getting into that detail now, kind of understanding how things are working, and probably also don't make assumptions about how they might work as well, right? I think it's going to be really important. But let's talk about kind of, 1st of July 2026, Shane, and, from a compliance perspective, what will the ATO be looking for?
Yeah, so obviously with Payday Super, there's a number of changes coming that the ATO is responsible for. So we're still finalising a broader compliance program. But when the Payday Super bill was tabled in Parliament, we did release a draft practical compliance guide, which outlines our approach for employers for the first year of Payday Super. So this practical compliance guide sets out the factors that will be considered when deciding how the ATO is going to apply our compliance resources, where to investigate an employer in relation to their payment of super on Payday Super based on what they're required to under qualifying earnings. So this proposed compliance approach does recognise the ATO is going to take a risk-based approach, and that employers who try to do the right thing in that first year and do resolve issues quickly should not be the focus of any ATO compliance action. So that practical compliance guide was open for consultation for 2 weeks, and that consultation period did close on the 7th of November. So the ATO did receive feedback, and quite a lot of feedback about that compliance guide. So we're currently considering that feedback, and we'll finalise that guide shortly, and we will republish the final practical compliance guide. So it's important to know that all payments to super funds on 1 July 26 will need to be compliant with new super stream requirements as well. So obviously as funds on board to contributions V3 includes the member verification request and the addition within the contribution message of Pay ID and the ability to use Pay2 is factored into the contributions V3 changes, so that data points can pass through to let the fund know exactly how that payment's been made. So that will support broader adoption of those things as well.
Correct. And Rob, obviously payroll providers have a big role to play in Payday Super. So how is Employment Hero helping employers get ready? And what are some of the things specifically that you're doing at the moment?
Yeah, so definitely there's a large role to play. We were looking at some of the data the other day, and currently around 87% of our employers are processing quarterly. And over 40% have a current weekly pay cycle potentially required under awards. So that's a big shift that they're going to have to go through. And so we're really working through everything we can do to support them. So it started with obviously working amongst groups like with ATO, Treasury and everyone very early to make sure that that business, the employer perspective was brought into the room. And we've seen great collaboration on that. So that's really been appreciated across the board. And now as we move into the implementation phase, we're really focused on education and support, and then how we as a platform can be ready. So in the education side, we've started our own activities around webinars, our Payday Super site, cash flow calculators to help employers plan, making sure that we're aware of all the published material from ATO, et cetera, and making sure that gets through to employers as well so they can plan well in advance and know their activity and roadmap. Specifically on our platform, we're obviously looking at all the upgrades to single touch payroll to make sure that's fully embedded in place, ready for employers to make it simple and easy. But then we've also lent in ourselves for our platform to try and just make the clearing activity much simpler and embedded. So we currently process around about 125 billion of payroll through the Employment Hero platform every year. And we're looking to make sure that we can have the clearing activity for superannuation fully embedded and automated into the Employment Hero platform through a solution called HeroClear, which will mean that we'll be using real-time MPP payments, working with partners like Zepto to deliver that, and AusEddy for the SuperStream messaging, so that the employer only has to go to one place, one platform, to conduct all activities end to end. And then, as I said earlier, it all starts at that onboarding. So we'll be helping improve data at every stage throughout, and using, MPP is not just about a faster payment, it is the enriched data and metadata around it means that you can automate systems upstream and downstream. Shane touched about the reconciliation. You can improve your reconciliation systems through MPP because of the positive confirmation outcomes. That makes the whole process easier. So that's really what we're leaning into within a single platform for employers to make it faster, better and simpler and reduce any risk of penalties.
Mm-hmm. And so let's touch on that a little bit more, Rob. You referenced, obviously, with Payday Super coming and people think about compliance, but real-time payments do offer a lot of other benefits outside of sort of just the speed. So what other opportunities do you think, are really opened up for organisations to think about? And why is it kind of important to think about it now?
Yeah, so, Payday Super is an awesome nexus to initiate this, but there is so much further. So I'll start with, a payroll example that we're working through right now. When we did look at how we'd bring clearing into the payroll system, we quickly moved back to, okay, we need a payment approver, but then you can actually go back to improved automated upstream, what we call pre-payroll processes, now that you have all of that built into the system. And so we're starting to automate workflows much further upstream than even the event of clearing, because the actual payment initiation event can be so automated and so clean when you think further upstream. If you expand that out to a broader adoption of real-time and Pay2, there's so many areas that could play out into. So yes, payroll, HR, but then you have accounts payable or cash flow or treasury management can be really looked at differently when you have, yes, the payment moving quickly, but all the automated systems upstream and downstream that you can build around those processes can materially change and improve your efficiency within your business. So that's what we're starting to look at, firstly with payroll, but then extending out into other opportunities with business. So we're quite excited about it.
Excellent. Well, we're also very excited about it, being in the payments business. Marnie, what's your thoughts around kind of what the future could look like when we think about, payments for businesses and kind of that longer term sort of future state?
Yeah, and I love hearing that from Rob, just sort of, even just thinking about for those payroll people that, are processing their pays, it's not just about the employee payments, it's also third-party payments. So you think about health funds that are receiving money from the employers or other third-party payments. And again, super is one of those components, but there's also tax that's involved there. So, payroll tax, and extend that out across any number of the business payments. And you're actually looking at complex sort of layers within a payment process. But at the moment, they're all very simple. But what we want to do, to Rob's point, is extend it to have enough information in there to be really, and I will extend it a little bit more, to be interoperable with other payments or processes, business processes, natural business systems. So what does that mean? Is that e-invoicing? Are we extending the payment message to incorporate e-invoicing? Are we using Pay2 to actually leverage, identifying where a purchase order has been made and actually getting pre-approval on those processes? I think that's the type of thing that we will be looking at. And when we say that, though, when we start thinking about that, these are long things that we need to take time and consider when we start talking about interoperability between different processes or business processes. This one, Super took us 7 years. Maybe, I sort of think that everything else that we do will probably take about that time. Pay2, 5 years, 6 years, maybe longer. So I think that we need to lean into that. The only other one I would say is, and Shane mentioned it as well, PayID and actually seeing the growth of PayID in the business space is going to be, I think, the next step and the next stage that we'll start to see some real growth, because the reconciliation of that process, even for a fund, and identifying different particular receivables processes with a PayID will be very unique, and it will actually allow for that reconciliation process because that it's going to a particular outcome.
Yeah. And so there's a couple of questions that have come in from the audience, so we might sort of switch to those. But maybe starting on one that is talking specifically about some of the MPP capabilities. So there's a question here, Marnie, that I might throw to you around how does Pay2 work in the context of Payday Super, and what benefits does it bring? We've kind of touched on it a little bit, but maybe let's kind of expand on that a bit.
And maybe Rob can actually talk to it a little bit more, but there's an opportunity for the payment initiation with Pay2 to be directed from the employer's account to a clearinghouse, or from, essentially longer term, a employer directly to the fund with the data going along beside that. Pay2 allows for third-party payment initiation, but it also allows, it is the replacement for direct debit, and we know that so many contributions that are going into clearinghouses at the moment are direct debit payments. So we know that is an opportunity to use Pay2. There are a couple of challenges. I won't shy away from that in terms of limits, but I think there's opportunity for us to actually, with this superannuation industry, we know there's only for 84 bank accounts, but there's a whole host of employers, but we know that they're only going to a very small number of clearinghouses as well. So is there an opportunity for us to leverage Pay2 within, a closed cohort of businesses, I would say? Yeah.
I'd say specifically the employer experience for using Pay2 can be materially improved for efficiency, but also control and therefore risk reduction. So right now, the average employer who's processing super is probably running through their clearing activity, which sends messaging out through SuperStream. But on the payment side, you'll probably download an ABA file from your payroll platform, or you might have a direct debit instruction that goes to your bank. That's often a semi-manual or manual process, but Pay2 can be a one-time process initiated from, say, your payroll platform, where you can then confirm that through your banking interface, and you're able to control that ongoing, which means the employer has control over all the deductions and can see those running through, but it's a one-time process that's very efficient ongoing. So yeah, really appreciate that in our platform of how we're looking at it.
Great. And if you have any questions, please feel free to drop them into the chat. There's a couple here, obviously kind of focusing on kind of sort of compliance and what does sort of day one look like, Shane. So for organisations that are obviously looking to be compliant, what will the ATO consider as reasonable steps for employers who are trying to comply, but maybe there's still some adjustment and transition happening at the time?
Yeah, and it's all about moving to, as early as possible, a paying super on payday timeframe. And where there are errors or rejections, that there's quick resolution, and that the money gets back to the fund as soon as possible. They're the key factors that we'll look at. Those employers who don't pay super at all will always remain the prime focus of the ATO's compliance resource, as we are addressing a $6 billion unpaid super cap. So they will always remain the top of our focus. As employers move towards their payday super obligations, it's all about making that genuine attempt to comply. So moving off a quarterly system onto a more frequent system is a key attribute there. Ideally, we want to see employers move to payday, making contributions on payday. And some may take longer to get there than others, but we all will determine the risk level of an employer based on how frequently they're paying super and how quickly they resolve any issues or errors that do occur. We do acknowledge also that with the super fund timeframes dropping from 3 to 20, and we did mention it a bit earlier, that will lead to more errors. We have done some modelling through our technical working groups, talking to funds about, well, what could that look like? So if we were to do nothing in the SuperStream space and funds had less time, we estimate the error rate would go, because the current rejected contributions today, the error rate's less than 1%. So about 1 million contributions today are rejected by funds back to employers. So we understand that's a problem, and error messaging is a bit inconsistent, so that's an irritant we hear about. But it is, in the grand scheme of things, 1 million rejections out of 200 million contributions is a pretty efficient system, but we've got time. Yeah. The fund's got a month to resolve the issues. So come payday, they don't have that time. So our analysis working with funds indicates that error rate could increase to 25 to 30 million rejections a year under payday super volumes, which is obviously why we've got things like the member verification request in the contributions message to help employers have that digital handshake with funds to get confidence that the fund can find the employee and can accept a contribution. Because those two reasons alone account for 98% of rejected payments. So if we can resolve that issue up front, it gives the employer more confidence that the tension point around having a rejection and having to fix that kind of takes some of that tension away. So it makes it a bit easier for employers to comply if they've got access to those things that will be available from 1 July 26. So our compliance approach will always be to direct our attention to those doing deliberately doing the wrong thing, as opposed to those who are generally trying to comply.
Yeah. Rob, a couple of questions around sort of, for employers thinking about what this change really means for them. So what will employers need to actually think about as it relates to their operational processes, or whether they need to upgrade systems versus, will it be their platform provider or somebody else that will kind of roll out some of those updates and help support and take some of that load for them as they think about that change?
Yeah, it's a great question. I think the answer is kind of, I'd say, almost along both. So the employer absolutely should be taking their own action to assess systems and be aware of the changes required of them. You should be projecting cash flow and your operational changes for moving from quarterly to your current pay cycle, weekly, fortnightly, monthly. And then, Shane touched on it before, everyone can look at what are the systems or processes you can strip out in your current activities. So even an employer, irrespective of what payroll platform or clearinghouse they're using, may be able to make some of their current workflows more efficient or more simplified when you think about the fact that you're now going to do super alongside pay. So there's no more separate superannuation batch activity. You can bring efficiency in by having everything in one activity. But then you also should be looking to your payroll and clearinghouse platforms to make sure that they've given you guidance, information, and are up to speed with these changes. So all DSPs, payroll platforms, absolutely should be aware of the STP changes to bring in qualified earnings. They also need to be looking at how they are passing data faster and helping you with validation to reduce those errors. Because as touched on, if the error count could be going up 25x, then you need to make sure to do everything you can up front to minimize that. So digital platforms, early validation will help employers. So you should be looking for platforms that can help you with that.
Great advice. A specific question here related to funds. So obviously, as you mentioned, Shane, from 1st of July 2026, funds need to be MPP ready. And the question is, there doesn't appear to be any requirement for funds to absorb MPP transactions into their registry systems in real time, but they can actually receive an MPP payment and bulk load the transactions at a later time. Do you anticipate that funds will be expected to process or absorb MPP transactions more frequently?
Well, from 1 July 26, NPP in is an approved payment method, but it is alongside BECS. But both payment rails will run in parallel, so processors need to obviously factor in and cater for both. I think when we look at the fund position moving forward, it probably will at some point be a natural shift to more faster allocation. And part day allocation, I appreciate there's complexities around, member allocation of accounts, unit pricing, all the complexity that comes with actually, allocating money in a fund. So there's a lot of change that has to happen in that space for faster from end to end. But I think we will get there over time. I think as there's more use of and familiarity with NPP moving through the rails and entering into fund systems, they'll start looking at ways with which they can bring their own efficiencies and improvements into processes and how they can use NPP broader. One of the things we put into the error schedules for updating for better error messaging is to encouraging return of a payment by a fund where a fund's had to return a contribution back to employer, that really does need to go back through the fastest rail. that's available, because it's important the money gets back to the employer as quickly as possible so they can fix it and turn it around and get it back to where it needs to go. And so it's not just about money in, it's also about money back.
Yeah, I think that's a fantastic point on the money back, around really looking for funds to make sure that is going through MPP as well, because, yeah, particularly for employers with a weekly pay cycle, any errors or delays could carry over to the next pay cycle and just cause a reconciliation nightmare when you might have an awareness of an error but payment taking longer to come through to match up. And so by everyone leaning into that, faster payment system, it will help every stage to reconcile much more simply.
Yeah, great. Well, we are out of time, but any sort of final parting words of advice for the audience today? Marnie?
Start now would be the thing that I keep saying. Talk to your bank. Start now and talk to your bank.
Yeah, I mean, my message is very similar. I mean, 219 days is not long. So even though obviously the regulations are still to be tabled in Parliament and other peripheral bits to payday, but the core bill is there. So the time is evaporating quickly. And of course, you've got Christmas in the middle of all of this. So yeah, don't delay. It's definitely my message as well.
Yeah, thanks.
Yeah, I mean,
Rob?
bit of a broken record, but you said start now and talk to your bank. I'd say start now and talk to your payroll platform. So absolutely critical.
Yeah, start those discussions now. And there are some resources available as well for people to be able to go and look at and refer to as well. So we've just put up the QR codes there for some of the information that's available from the ATO, from Employment Hero, and also from AP+. So I would just like to close by thanking the panellists. Thank you, Rob, Shane and Marnie, for a great discussion. And thank you all for joining us today. And I wish you all the best for the holiday season. Thank you.